Hey, oh sorry, got a connection issue. Hey, welcome to Tax Tip Tuesday. I'm your host, Chastity Grady. I'm the owner of Grady Tax Plus, where I help service-based providers understand their tax situation and help keep their finances organized. So today's topic, we're going to talk about estimated tax payment, okay? So estimated tax payments, this is one of those topics where a lot of people get confused about. It's a stressor for them, and I want to help break it down so that it's not stressful for you, okay? So that you can see that, quarterly tax payments really can be used as your advantage, okay? So that you don't feel like when tax season comes, you're so stressed out when it comes to paying taxes, okay? So I'm going to help you understand how to use these to your advantage, all right? So let me talk about it for a little bit. So when it comes to earning income, right? The IRS has a pay-as-you-go system. So as you earn income, they want you to pay taxes on that income that you're earning. Generally speaking, when you're an employee, it's much easier to pay as you go because once you get a paycheck, ideally, the taxes are already being taken out and going directly to the IRS, and so it's no issue for you. You don't even see that money coming to you. However, when you are self-employed, you have a business, you're an independent contractor, you're working for yourself, you don't have that same luxury of when you're an employee and that money you never see it because it's automatically taken out. You have to be intentional about taking the money out yourself when it comes to taxes. And a lot of people miss out on that one step. They miss out on this one step, which causes stress later on because then, next thing you know, the year has flashed and you never took out anything from any of the money that you earned, and then you're stuck with having to pay a tax bill that, is unnecessary for you. So, like I said, I'm going to break it down so you can see how if you pay quarterly tax payments, how that actually helps you have a better outcome for the tax season, okay? So, when you are self-employed, you want to look at, when you're making money, look at the different quarters that are in the year, okay? So you have the first, second, third, and fourth quarter, all right? When you have your, finances organized, hopefully you do, you can go by each quarter. So from January to March is the first quarter, okay? You want to look at what income and expenses that you had for that month, for those 3 months. You can do it on a monthly basis, but the quarter itself is those 3 months. So whatever your net profit is for those 3 months, that would be the amount that you would need to pay taxes on. Okay, so a lot of people think they pay taxes on the revenue, the actual revenue that you're bringing in, but you really don't. You'll be overpaying if you did it that way. So you always want to look at the net profit instead. All right. So when you look at the net profit, then that's where you want to take the percentage out of what you should pay for that particular quarter. Now, the percentage is really kind of up to you. A lot of people say, take 30%, take 25%. At the bare minimum, you want to at least cover the self-employment tax, which is the 15.3%, which is made up of the Social Security and Medicare. But you also want to keep in mind the federal taxes, and depending on your tax bracket, your federal taxes can be in the 24 percentile or 22. Really, just most people are in the 24%. So if you add that 24% with that 15.3%, you're already, over that 30% of your income that has to be paid for taxes. And this is not, looking at, what deductions you may qualify that goes on a tax return. This is just strictly from the income and expenses standpoint. So, generally speaking, like I said, most people go ahead and do 30%. If you're more conservative, then you can do 15, but you just have to keep in mind that you may have a remaining balance when it's time to file your tax return. So when you do that for each quarter, so I talked about the first quarter. The second quarter is really short. It's only April and May, and you make a payment in June. And then for the third quarter, it's June through, I believe, August. Yeah, June through August, and you make a payment in September. And then September through December, which is the fourth quarter we're in now, that's what we're kind of looking at right now. So if you haven't made any tax payments throughout this whole entire year, then you might want to look at paying a little bit extra for this fourth quarter payment that's going to be coming up for next month in January, all right? And the reason why you want to do that because you want to help at least try to eliminate any kind of penalties that you may get for filing, or not for filing, but for paying late, okay? The IRS only allows you to have a $1,000 balance, okay? If you have a $1,000 balance, they don't care too much about anything, all right? But if you have anything over that, if you owe over $1,000 in taxes, then they can go ahead and penalize you for not paying more throughout the year, okay? So again, like I said, it's not really, when you think of estimated tax payments, is really not something that you should stress about. You should use it as your advantage, especially if you're a business owner. Even if you're not a business owner, it's not just business owners who are supposed to make estimated tax payments. If you're an employee and you never have, you put that zero, you never have any taxes taken out, then you're required to make estimated tax payments depending on your tax situation. And also, if you have stocks, if you take anything out of retirement, you have to pay taxes on that too, especially that 10% if you have that penalty for withdrawing early. All of that, those are all reasons why you would make those estimated tax payments. So don't let it be just about if you have a business, because it's not just for business owners. It's for anyone who has generated any kind of source of income or taxable income rather that they have to pay taxes on, okay? So let me just recap. When it comes to those tax payments, okay, you want to make sure that it's off your net income if you're a business owner, looking at your net income for those particular quarters, okay? It's ideally if you can do it monthly and you can put something back every month, that will help you have less stress versus coming up with 3 months, because if you don't have the money on hand, then it might seem like a stressor for you to look at just 3 months worth of net profit and like, oh my gosh, I gotta pay this amount. You might want to go ahead and break it up and do it every month, which is what I do for my clients. We break it up every month to see, for this particular month, put back this amount for this, because some months they might differ. You might put back $500 one month and then put back $0 the next month. You just never know, or $1,000. So it really kind of differs. So if you have like varying income like that, it might be your best interest to do it on that monthly basis versus just looking at that full quarter to see what to pay, what percentage to pay. And when it comes to percentages, as I mentioned, it really kind of depends on you. Ideally, the average percentage you should at least pay is 25%. Okay, and that will help include some of the federal taxes, depending on your tax bracket, as well as the self-employment taxes, which is the 15.3%. All right. And then, like I said, you want to do that for each month, for each quarter, each month and each quarter, so that you can make those payments timely for those different particular payments. Now, if you wait until the end of the year, you don't do any of this. So we're already at the end of the year. So if you wait till the end of the year and you never put any money back, then that's where that stressor come in. A lot of people end up not filing taxes because of that, or they end up not putting their business, if it's their business that is on the money, because of that reason. So that's why I want to stress that, estimated tax payment, there's nothing wrong with it. It's okay to make those payments quarterly. It's okay to put back that money every month or every quarter so that you're prepared when tax season come. You either have a zero connection, you either have a zero balance, or you have just a little bit more to pay depending on how conservative or liberal you were, okay? So if you have any questions about estimated tax payments, definitely go ahead and leave me a comment in the comment box, and I'll be sure to help you with that question. If you are someone who needs help with your specific taxes, you want to see how much you should probably pay for this upcoming quarter, then go ahead and schedule a consult with me. I'll have my link in the comments down below, and I will see y'all in the next video.